I'm Charlotte McLeod with investingnews.com, and here today with me is Peter Grandich of Peter Grandich and Company. Thank you so much for joining me. Great to have you here.
Great to be back with you.
Really good to be speaking with you. This is my first interview of 2024, so of course we're going to look forward to the new year and help investors get situated. First, though, I want to take a quick look back at 2023, in particular for gold, and look at how it performed over the course of the year, if there were any surprises for you or things that you would want to highlight when it comes to gold.
Well, gold itself did rather well, but for me, as I enter my 40th year in and around the financial arena, I would suffer for the first time by being on the wrong side of a vicious bear market. And that means that I was very long mining shares, particularly in the junior sector. Until the last days of December, it was a year you truly would want to forget. But fortunately enough, or as we enter here in the new year, that looks to be behind us. But I certainly don't think I can mentally or financially afford another year like that. So I'm kind of glad that 2023, the sense is gone.
Yeah, I think I feel the same way. And I'm going to come back a little later and ask you about the health of the juniors, because I think that's a really important topic right now. When it comes to gold, now looking forward to 2024, if we could look at drivers. I know that last year when we were speaking, you mentioned a couple of important drivers that you saw, which were central bank buying and the de-dollarization trend. So wanted to check in and see if those are the trends that you think will continue driving gold in 2024, if there are other elements on the table.
Sure, they still are. They're still a main factor moving gold forward. I think the additional now that's come into play, obviously, is the geopolitical factors, not only because the Middle East, as we speak, it is a tinderbox. There's just no way you could put your head on a pillow at night and just say, listen, there's no chance I can wake up tomorrow and be in the middle of a major war. There's that many potentials there. We also now are going to have a uniqueness of what's going to happen with Ukraine. It's obvious now that the will of, at least in America, is not to keep supporting it in the way that it was. Without America being a major supporter, can they continue their fight? And then, of course, there are a lot of other political issues. And again, the single biggest one, and I still say it, and every month I get more bolder because it looks more appropriate to be this way, and that is the coming formation of the BRIC nations. And realistically, with America looking out, looking in, this is not really something where a lot of other Western worlds are going to be economies hurt in the manner that the U.S. is going to be. And I think it was extremely critical, and I think Wall Street has paid little heed to it and will regret that they did, on how important that is. And there's no question that someday soon, in the next 1 to 3 years, they are going to introduce some sort of special currency or way of trading that'll be away from the dollar, which they've already been doing, but I think it will become more formal. And it's going to involve gold in some way. That's the only reason for why they have been such aggressive purchases, particularly China and Russia and all. And they continue to be. And so I think all the undercurrents that you would want for gold to continue going higher, I think we easily, will break through here in the first quarter through the 2100 area. And then that's going to just bring in a whole different type of investment mood for gold. I really think there's a very strong chance. It was a target I started with 7 years ago when it was down at 1,300. I said gold can get to 2,500, and I still believe that's a reasonable target that may not come this year, but certainly within the next 1 to 2 years, I think is very viable.
The other topic that I want to touch on with you is, of course, the Fed. And our last conversation was in June of last year. And what you had said at that time was that we wouldn't see the Fed go back down when it comes to rates until 2024. And of course, we have not yet seen that. So I want to ask you what you see coming from the Fed as we move into this year.
Well, I've coined them the don't worry, be happy crowd on Wall Street. For the most part, the financial service industry is extremely biased to the long side. They have this attitude now, what we like to call of a Goldilocks economy. And I remind everybody, if you ever knew the story Goldilocks, first of all, it's just a fantasy. It's not a true story, so don't buy into it from that sense. And the original story, until they decided to change it, was the bears end up eating poor Goldilocks at the end. And I think that's going to be, unfortunately, for those that buy into this Goldilocks economy. I don't think the Federal Reserve is in the mood to raise interest rates much higher, because there's so many worse issues for them the higher rates go, than what it may help on the inflation side. But at the same time, I don't think we're going back down to zero or near zero interest rates again. And I think that's the big change for people. And I think the big change also, excuse me, is that they're not going to be the rescuer that everybody, or what the Fed put used to be called, that sooner or later the Fed just opens up the spigot, prints all sorts of money, and stocks can only go higher and higher. I think that'd be the big surprise, if we speak this time next year, that the Fed did not get into an extremely accommodating position. But I also don't think that they have much left, if at all, on the interest rate rise. What's going to play a role here, and it becomes very difficult for the Fed to walk that tightrope, is the political picture is really going to take hold now in a couple of weeks here in the U.S., the presidential race. And it has all sorts of asterisks that we never had before. We have one guy person's leading that's been indicted in 5 different states. We have the other party guy, no one even knows if he can get himself up in the morning anymore. And we have a whole bunch of other issues, that are pending, that just make this political environment just so challenging, the debt issue and the immigration issue. So I don't think the Federal Reserve is in a position to be tremendous tighteners, but I also think it'd be a mistake to think they're just going to become loose as a goose and just go back to printing money like there's no tomorrow.
I'm glad you brought up the US election because I think that's definitely going to play a role in what happens next year. The other topic that I'm hoping we can go over is the one I mentioned at the beginning of the interview, and that's what's going on with the juniors. So I wondered if you could comment on the health of the market. I know you mentioned we saw some improvements at the end of the year. Do you think that's going to continue into 2024? What can we expect from the juniors?
Well, the good news is, I've been able to manage to wipe off all the blood that I suffered from my hard core bear market we had. We had the worst bear market in the 40 years that I've been around them. I think there's some important changes if you're going to play the junior market, to appreciate. I knew of them last year and I still went against them, and it was costly. I don't think the junior market is what it was 20 or 30 years ago. I think it has stiff competition now. There's a lot more speculative ways, and the single biggest one, obviously, is cryptocurrencies. There's no question about it, whether you're bullish, which I'm not, or you're bearish, which I am, that cryptocurrencies and the interest in them, particularly as you go down the scale of people's ages, clearly took away money that otherwise would have found itself into the junior market. The second thing that I think that happened in the junior market is become very difficult to be a miner, to explore. I like to say that 30 or 40 years ago, you and I could have spun a globe, let our fingers land anywhere. We wouldn't have a difficult thinking we can go to that country and go exploring. That's not the case anymore. It's really shrunk dramatically. And quite frankly, it's going to take a lot for majors, especially when you start seeing countries like in Panama and all, where in a sense they've taken control or nationalizing mines, that they're going to want to go out and spend a couple $1 billion to build something that may not be theirs in a year or two. So I think those two things, plus the regulatory, juniors are always mostly hopeful. We're hopeful to find something. We hope that this deposit may turn into something. And yet it's become really difficult for the marketer. The people that used to be available that played the junior market, you would go, you're going to have a great show up there in Vancouver in a couple of weeks. And there would have been years ago 500 to 1,000 brokers there, or now called financial advisors. And they all had books of businesses where they were buying and selling juniors for their clients. That's basically a dinosaur. There still may be a handful of financial advisors that buy and sell junior resource stocks for commissions, but that's really come challenging. So now that junior resource company, who used to get 300 or 500 clients when they got one financial advisor interested, has to get to those 300, 500 on a one-to-one basis. It's much more challenging to be in the junior market these days and all. And I think also, Charlotte, that because of how severe the bear market was, we're going to see, and we're already seeing it, a lot of mergers out of necessity. Juniors are just not able to fend for themselves anymore, and financing still a big challenge, even though we lifted off the lows towards the end of the year. So I think the market's more challenging. And what's ironic about it is it's at a time when we have such a big need for metals. We used to live in cycles in the junior market anymore. There are no cycles. We have far more need for metals than that's currently going to be available. And that's in a wide range of metals. So it's the best of times, but it's also still some of the worst of times for the junior. And that's why I still don't think, although we're off the bottom, I don't think it's going to be a rocket shit straight up, because we're going to need to go through an M&A period where there's some consolidation in the industry, and that'll also be up in the smaller producers kind of merging together to become bigger ones, because that's the only way they can attract institutional investors now. So it's far more challenging than it was 20 or 30 years ago.
Many great points that you brought up there. And, one of the things that stuck out to me was your comment about how many different directions that investors can be pulled in, whether it's good or bad. With the crypto, there's a lot of different things to look at. And one thing that I wanted to ask you about, so I've been seeing headlines recently about how Costco is selling gold. Walmart, I think, is even selling gold right now, and people are really interested. They're snapping this up. So what do you make of that? I know gold is not the same as buying a junior resource stock, but it seems like there's a comparison there.
Well, it's interesting you say that, because that was the best lesson that was learned last year. Because for years, we would say at shows like the one that's coming up, hey, owning mining shares is like owning gold. That was a standard line that was said by many so-called experts, including yours truly. We learned last year that's not the case. I think what's happening there is people are recognizing that there is a need for something other than the dollar. The dollar is earmarked to go a lot lower over time for a whole lot of reasons. But I think the general public now is starting to appreciate and understand that having something in their hand and counting on it is worthy. And that's, when you get these Walmarts and all willing to take it as a loss leader, so to speak, they've managed to purchase this gold a little bit underneath the market. And of course, they limit it, but it brings people into their store. I mean, they're not interested in getting in to become bullion dealers. It's just a very small part of their business, but it was something that got a lot of interest. And that helps, because just a small increase in the typical demand of gold can add hundreds of dollars to the price. So it is a worthy thing to look at. And I don't think it's the only reason or the reason to go out and buy gold, but it's certainly beneficial that companies like that now are offering gold out for people to buy in the stores.
And so, in your opinion, are we seeing at least maybe a small mindset shift there, where they're looking at gold now, more people are getting interested, and maybe we see that come over to the stocks at some point in the future?
Yeah, I think that's something to be hopeful for. I think one thing is clear, at least in North America, Canada, and the US, there's at least some individual interest now. Excuse me. Most of the interest for years has been in the Far East. The typical Asian citizen was much easier for them, and became a way of life of buying physical gold. We're here in America. Listen, the don't worry, be happy crowd still treats gold and the ownership of it like kryptonite. It goes against, because they make their living selling financial assets. But the good news is now more and more people sidetrack the financial institutions and are handling their own investments. And that's why I think that's been another aid to why they'd be willing to go into a store and purchase gold for themselves.
Yeah, really interesting. We are a little bit slow on the uptake, I think, over here in the West, but looks like we might be getting there. So lots of great information on gold, but I also want to touch on uranium with you. So uranium is coming out of a great year. I think investors who have been in that space are going to be really happy. And of course, we know that you're bullish on the sector. But people have a lot of questions, after this year where we've seen such a big increase in the price. I think people are wondering, will we continue to see that steady rise? Or are we heading into a scenario where we see more of a spike similar to cycles in the past? So curious to get your thoughts on uranium in 2024.
So when I first got involved in uranium, it was on either side of $20, and companies like Cameco were in single digits. I thought it was a slam dunk to go up. We've had a good move in it. Excuse me. I still believe that my target of a triple-digit uranium price, which just a year ago didn't seem possible, now, as you and I speak, we're just a few dollars away from it. I think that the challenge for the retail investor is this, and it's why I took the other route and I didn't take the route of juniors. And that is that unlike in other metals where there's a prolific amount, hundreds of different companies producing, exploring it, for developing it, in the uranium market, it's very narrow. There's a handful of companies that produce it in a sense that you can play as a producer. And then the rest are all wannabes, people that feel that they have good reason to believe that they could find and develop uranium, and they may have a good justification. But the risk tolerance for people in that is very, very limited because it's not something that's easily to be done. It's not something that people used to be doing. And they're afraid they're going to miss the cycle and that somehow it's going to be like copper. Like if you don't find copper and develop in the next 2 years, it's going to turn down again. And that's where I think they're making a mistake. That's why I still think there is light at the end of the day for the junior sector of the uranium, but it's going to take $100 plus uranium price to bring in that masses for it. And that is that the uranium price is going to stay quite high for quite some time. There's no question that nuclear energy now has made a 180. People around the world who just a few years ago would say, not in my backyard, now here are begging for companies to build nuclear plants so they can provide all this power that's going to be needed in this electrification that's coming in the world. And so I think it's going to be longer lasting than most people. But for me, because I was in from such a low end and have such gains, I don't feel I need to first become very aggressive in it at this time. But I do think it's going to get above 100 and surprise people to stay there. And once it stays there for a length of time, then I think people are going to be willing to be more speculative and pay up for the junior side of it. But as of now, I really have felt that you needed to stay with the few main producers and, of course, the companies that actually physically buy ownership of it, because, that there are some of these have doubled and tripled already. But I still think it's a market that has a ways to go. It's just not early anymore.
Yeah, and you went kind of exactly in the direction that I was hoping. I think a lot of people are wondering, okay, we've had this big gain in the price. How do I play the stocks? So for you, still looking at those companies at the larger end of the scale that can produce. The other question that I had for you is, have you taken any money off the table in uranium at this point, or are you still waiting to see, that triple digit price and beyond?
I've held my core holding, and that's Cameco. I still think Cameco will make a new all-time high. I I do think that we're going to have a triple-digit price, so there's no reason yet to sell anything that physically owns physical ownership of uranium. I just think that it goes back to what we talked about before. The junior market is not what it once was, and I don't think this is still going to be, even though we get a triple-digit price, all boats get lifted. So anything that's uranium is going to go up triple-digit. I don't think that's going to be like it was years ago. I think you're going to have to be more selective. And of course, the hope is that there'll be some movement of institutional interest down into the junior sector. We have not seen that yet in really any metals. We saw it briefly for lithium, and as fast as they went up, they were more like a bottle rocket. They came back down. And until we still see real keen institutional interest, I think it's just very hard for the juniors to have any sustainability as a group. Doesn't mean individual stories can't do well, but to expect everything to move, I think, would be a mistake.
All right. Okay. I think that makes the uranium situation and your thoughts pretty clear. I have what I'm hoping is maybe a fun question, but this is something that I've seen investors wondering, as we've watched uranium have this great year. People are asking, what's going to be the next uranium? And not necessarily in terms of, wow, the price is going up, but in terms of that supply demand situation that has become really good over years and years. And now it's finally starting to play out into something very solid.
Well, it's very small. I don't know of a lot of areas to play it in, but it is something that I've spent the last 6 months trying to research aggressively, and that is the coming crisis in water. Water is going to become an extremely important commodity. It's very challenging. Unfortunately, there's not a lot of public ways of playing it, because it's not like you go out and you drill for water, just like you drill for a metal and all. But I think what you will start to hear, not only regarding food, but in particularly water needs, there's going to be dramatic. And part of the interest is, can we convince people to turn seawater into drinking water? Now, in some countries, it's, Israel in particular, it's used and people have grown used to it. It's still quite difficult for people to imagine that here when there's still ample supply. But I think as water becomes more challenging, and of course, in Canada, there's so many lakes, you can't imagine you could be out of water. But water in the world itself is going to become a much more needed commodity than even now. And there's going to be, unfortunately, a lot of shortage for it. And there's going to be obviously political will put into it and try to control, influence areas where, water is plentiful. And that's probably one of the good things that Canada has going for it because it has an ample water supply.
Yeah, very true. Although, we're having a very mild winter right now, and I've been thinking about that, are we having enough rain right now? So kind of at the top of mind for me right now. I wonder, so water, that's a great one for people to look at. Another thing that in my mind at least is kind of associated with that is, food and the agricultural commodities. Is that something you have an interest in?
It's very challenging now. There's for whatever reason, we've watched people like Bill Gates and all, and foreign countries just buying up farmland, and it's becoming very concerning now. And where it concerns me mostly is more and more Americans are getting on food lines at food banks, working class people. So while the elite still don't have issues, more and more people, I think, are going to face food supply issues around the world. And I'm concerned because it seems like farmers have been made into bad people. You can turn on the news and see many farmers around the world are fighting this belief that we have to get rid of cows and all this for climate control and all. And I'm worried that too few people are going to be able to control food supply. And it's just all part of this World Economic Forum thinking in one world order and this kind of stuff. It is real. I'm not a conspiracist. I don't spend a lot of time in that, but I think it's a legitimate concern. And one of the major reasons why that I really think in the next 5 to 7 years, here at least in the United States, we have so many issues that I think are going to cause issues that will rival what it was like to be during our Great Depression. Because again, here you made a very good point. Food, the simplest things that some of us take for granted are becoming more and more challenging for a lot of more people to acquire, and not just in third world, in so-called Western countries.
Yeah, I think these are really important topics to keep an eye on. So thank you for going over that. The final point that I wanted to ask you about is I wanted to check in on copper. So this is a metal that we've talked about before, part of the energy transition. Of course, it's known as Dr. Copper. And I'm curious on your outlook for copper in 2024. We know that we need to look at the economy. We need to look at what's happening in China if we want to know what's going on with copper. So what are your thoughts on 2024 for copper?
If we weren't in this malaise of economic growth, we probably would have seen a stronger price, because if you look at what people's expectations on the need for it past the next year or two is so dramatically strong compared to what known supplies are out there. You go back to what we discussed earlier. It's going to take a $5 or $6 price before some major is going to go into South America or up a major mountain with all the political and social unrest and risk putting $1 billion to develop some copper mine. Excuse me. So I still think the price has to go substantially higher. I would have thought by now we would have been above 4, but I understand why, because last year was just a bad year all around. But I really think once we get above $4, I think we're going to see a lot of momentum flow back into the copper price. And probably by this time next year, we'd be pushing back towards the highs that we saw in year 5. So I'm still very, very bullish on it. It's taken a little bit longer, but it's also given an opportunity to acquire some projects that got really marked down way more than justification. If there was a particular metal that got oversold in terms of the mining stocks and the exploration companies, there was a lot of the copper plays, and they've become extremely attractive in my view. It's, one of them that I own is my largest holding by far. So bullish by because I have to, or bullish because I believe it in so strongly. But I still think copper has a strong upside, over the next 1 to 3 years.
Okay, so copper is one that's just going to take maybe a little bit longer for us. And, just touching back on the economy, I didn't ask you earlier, but I'll bring it up now. So for the US, are you seeing a recession in 2024? Or do you think that the Fed can strike that balance and engineer that elusive soft landing?
Uh, there's, like I said, right now we're in the midst of this Goldilocks view on Wall Street because of how the markets ended in 2023. I think the political turmoil, and it's going to become very, very ugly. I mean, uh, there is no more middle anymore in the United States. I can't speak for Canada, but you're either left or you're right. There's no more center. And each side makes, to their mind, a great argument why the other side needs to be eliminated. I mean, politics here in the U.S. is so bad that not only do the two parties not be able to sit down and get any real legislation done that's worth anything, but now there's fractions within the parties that can't stand other members of their own party. So I don't see how they are going to be able to handle the enormous problems we have in the U.S. The first being the debt. It's insanity now. We're spiraling completely out of control on the amount of debt we're acquiring. We have an immigration crisis, like it or not. It's nothing against individuals or people or colors of skin or else, but you just can't take in 10 or 15 million people who are really basically coming with their shirts on their back and not expect to hit you economically and socially. And so I just think that it's very hard for me to see this so-called soft landing and everybody lives happily ever after. Whether or not there's a recession, I don't think is as important as how much turmoil there's going to be. And I think so fewer and fewer people now are moving forward. Most people will tell you now that they're worse now than it was even before COVID. That's been polls that continue to show in the United States. And so that group that's doing well is shrinking. And eventually they're going to be pulled down by the weight of the people that are going backwards. And that's how I see the economy developing over the next 12 months. More of a slowing down, and whether we get technically into recession or not, but most people not benefiting from the economy, most people starting to hurt because of the economy.
I think that's a really good distinction, recession or not, what is actually happening to real people. So that makes a lot of sense to me. Those are all the topics that I hoped to cover. But do you have any final words that you would leave investors with heading into 2024? Because it's looking like it's going to be an interesting year.
So my motto is to be a live chicken versus a dead duck, especially after last year taking such a hit. Personally, I think you err on the side of caution. It's better to be a year too early than a day too late. And I think people are still, on general, way over invested in general equities. I think that they've gone that way because they've gone to a lifestyle where they need above average returns in order to keep living beyond their means. And it's becoming harder and harder to do. And I think as the year develops, they'll see they won't have that ability and they'll have more troubles keeping up with what they already have. And that's where I really think things will start to tailspin at a time when politically, socially, and economically, things are all going in the wrong direction. And I don't sell anything that benefits from that. I don't have dry food, ammo, cabins in the woods, even gold. I don't sell gold at all. Unfortunately, in my planning business that I still do in the U.S., most people don't want to hear what you and I just discussed, but it is what I see. And I'm here to just tell you what I think, and I appreciate the opportunity to do so.
Well, thank you very much to come on to talk about what's coming in the next 12 months. We'll definitely check in. We'll see how things are playing out. I think a lot of what you said really rung true to me. So thank you again for going over everything.
Thank you for having me. God bless you.
Of course, and once again, I'm Charlotte McLeod with investingnews.com, and this is Peter Grandich with Peter Grandich and Company. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.